Did we just see a top in gold? Did we see one in mining stocks? Did we see one in silver? Well, let's take a closer look. My name is Przemysław Radomski, CFA, and I'm talking to you on November 16th. Let's take a look at the charts, starting with the USD index. The reason why I'm looking at this chart is that the USD index is negatively correlated with the precious metals sector. Currently, the correlation is below, visibly below zero. It's minus 0.76, so strongly negative, which means that what's bullish for the USD index is bearish for gold. And what we see right now in case of the US dollar index is that it did something very bullish yesterday. Yes, it did decline by 0.22% yesterday. However, let's keep in mind that it's just a change from day-to-day point of view, so close to close. However, on an intraday basis, we saw a huge reversal. And during this reversal, during its lowest point during yesterday's session, the USD index moved very close to its 38.2% Fibonacci retracement level. It's marked with blue. And at the same time, it moved very close to its mid-2022 low and the May high. Price extremes provide support. Fibonacci retracement levels provide support. And when they two align, they together provide strong support, or very strong support in this case. The strength of, so we have already two indications of an upcoming reversal. Well, basically we already saw the reversal, but the odds are that the reversal is true and that is likely to be followed by a bigger rally. And I don't mean today's market action where the USD index is once again testing this level. It held, so it proved to be strong, so it's likely to hold today's attempt to break lower as well. I'm not talking about just about this support level. I'm not talking just about the reversal itself. I'm talking also about the position of the RSI indicator, which is very close to 30. And the last time we saw that was at the mid-2021 lows. All right? That's what happened here. What happened in the May and June 2021. What happened next? Well, the USD index then rallied by 15 index points. That's where the huge rally started. Some can say that it started in early 2021, but the bottom in mid-2021 was not much higher. Anyway, what happened in gold and in silver was that they both topped. Here's what happened in silver. Here's what happened in gold. The tops were profound. Gold then declined quickly by about $150 in a matter of a few weeks. And within 2 months or so, it declined approximately from $1,900 level to below $1,700 level. So by more than $300. Yes, that's quite significant, needless to say. What are the implications now? Of course, they are bearish for the precious metals sector because, as I said at the beginning, let me clear this up, the correlation between the USD index and gold is strongly negative. So all these indications coming from the USD index, the RSI, the support levels being hit, the shape of the session, the intraday reversal, as well as the analogy to what happened at the previous time when RSI was this low, they all support lower precious metals prices in the near future. What about the other market that impacts the precious metals market, at least from the short-term point of view, the general stock market? Well, let's take a look. The S&P 500 corrected 38.2% of the preceding decline. So again, the USD index corrected 38.2% of its rally, and stocks corrected this amount based on the decline. That's marked with black Fibonacci retracements over here. This retracement aligns with the psychologically important 4,000 level, And during yesterday's session, the S&P 500 once again tried to break above it. It tried and it failed. The closing price was over 8 index points below the 4,000 level, so the breakout attempt failed. Where the implications are that stocks can now return to their main trend, which remains down. And the opposite is true for the USD index. And both are likely to negatively impact the precious metal sector. And in particular, the impact is likely to be negative, particularly negative, for mining stocks. You can see gold stocks over here. They rallied quite visibly recently because of, well, the rallying gold and the rallying stocks. After all, mining stocks are stocks. The profits ultimately depend on gold prices, silver price in case of silver stocks, because that's what they produce or they are looking for in case of junior miners. However, they are also trading on the stock market. They are related to other stocks as well. And here's what we already saw yesterday. Did you see the slight dip in the prices of the HUI index? Stocks were up by almost 1%. Gold and GLD ETF were up during yesterday's session, and yet gold stocks were down. And you can see it more clearly on the GDXJ chart, where you see that junior miners, because that's where the GDXJ is proxy for, declined by 1.612%. That's a lot, especially given that gold didn't decline. Gold ended the session higher. At least the GLD ETF did, which is comparable to GDXJ because of the same opening and closing hours of both ETFs. And but that's not the only thing that's bearish that we can see on this chart. Of course, I commented on this chart in my previous analysis, not available on YouTube, but on sunshineprofits.com. And you can see that indeed GDXJ followed the zigzag pattern, and it seems to have topped at the upper border of the pattern. This resistance was strengthened by this line is not perfectly horizontal, but still at its August highs approximately. And this indicates that the top was likely in. The RSI was visibly above 70. That's something that accompanied tops in the past as well. Right, you can see, in this case, that was not the first time the RSI jumped, was not the first top, but the top formed shortly thereafter. The same was the case this time. Also here, you can see the spike in the RSI, a major top. Also here, and also in March. All right, so that's quite a reliable indicator. And also, let's take a look at the shape of the recent price patterns. Some of you are probably familiar with the Elliott wave theory. I'm not using it that often. However, in this case, we see a really clear example of the waves in practice. You can see 3 waves down and one of the classic ways for the market to correct, 2 waves up, and actually an A, B, C, A, B, or B, doesn't matter actually, C pattern for the correction. And the fact that mining stocks declined despite gold didn't decline serves as a confirmation that the correction is over. And if it's not over, it's at hand because, those patterns where miners are weak relative to gold could repeat themselves. So I'm not saying that, definitely this is the top and I'm certain of it. Well, no, there are no certainties in any market. And what I'm saying on this video is not an investment advice, it's just my opinion only. And investing and trading is risky. But still, that's what I think. It looks like a top, and that the next really huge move lower is is about to be seen. Again, just my opinion. What does it mean for gold? Well, gold is likely to decline too, as the entire precious metals sector is likely to move lower together. I'm not covering this in this video because I don't want it to be very long, but the analogy to 2008 to 2013 still remains intact. Because that's a long-term analogy, it takes a lot to invalidate it. Nothing happened that would invalidate those extremely bearish analogies. Based on them, based on rising real interest rates, and the medium-term uptrend in the US dollar index, despite the short-term correction, the outlook for the precious metals sector remains very bearish for the following weeks. I know the last couple of weeks doesn't confirm this, but well, once you zoom out, the picture becomes clearer. There are no market moves up or down in a straight line. There will always be corrections along the way, and this is one of them. Sure, this is trying. These are trying times and difficult times for those who are positioned to take advantage of the decline. And I would like to congratulate everyone who remains patient in these trying times. It's not an easy thing to do. But let's keep in mind that what appears easy to do, so follow the trend, follow the herd, is rarely profitable. After all, if investing in trading was easy, everyone would be doing it, everyone would be making a lot of money, and that's simply not the case. So usually what is difficult might be the right thing to do. Obviously, acting against everyone is no guarantee of success. In my opinion, the best approach is to simply analyze the market as objectively as one can, looking at the market from many angles, from many perspectives, taking into account many points of view, and then forming as unemotional as possible opinion on it, and then acting and positioning oneself accordingly, while obviously taking into account their own risk tolerance, ability to take risk, and their own unique financial circumstances. I'm not going to tell anyone what to do with their money, how to trade, because that will be investment advice. I don't provide such, but still, as far as the outlook is concerned, in my opinion about it, I do think that the precious metals market is about to move lower, much lower, and the upcoming decline could be the biggest part of this huge medium-term decline. And it could be more volatile than what we've seen so far this year. So thank you for watching. If you're not yet a subscriber or you're not even on our free mailing list, please visit sunshineprofits.com/YouTube and sign up to stay up to date. Thank you once again, and have a great week. Bye-bye.